All right, welcome back, everyone. Day 3. We're already at day 3. It seems like day 1 just happened yesterday, but it was actually 2 days ago, and today we're at day 3, and we're introducing concepts of time and price. So a lot of you out there, if you studied trading before, if you studied time and price theory before, a lot of this may be familiar to you. However, we are going to go a level deeper than most people go, not just talking sessions, not just talking time frames, but we're going to show you how to actually put everything together in a way where you're actually honing into the time window that you're going to be focusing on specifically for your trades, right? As a beginner trader, I made the mistake of just looking at the market whenever. Like, I knew NYSE Open was at 9:30, but I thought you could just trade whenever. I thought if you saw the pattern at 1 a.m. versus 9:30 versus 6 p.m., if it's the fair value gap, it's a fair value gap, right? If it's support and resistance, it's support and resistance. Wrong. That is incorrect. But a lot of traders still think that. So what we're going to do in this video, the goal of this is for you to understand both elements of time and elements of price. So we're going to go ahead and get started here. So what is time and price theory? What exactly is the importance of time and price? Well, price is delivered by an algorithm. My Discord is named Algo Ninjas for a reason, because we get in these markets, we get in the algorithm, and we go in for the kill and we get out. So we're like assassins. We're silent assassins of the algorithm, but price is delivered by an algorithm. There is no buying or selling pressure. There is no just like, this is buy resistance or sell resistance. It is delivered by an algorithm. And algorithmic theory is based on time and price. Price levels are useless until time is considered, and time is of no use unless price is at a key PD array. Blending the two yields astonishing results and precision. And that, ladies and gentlemen, is from the man ICT himself, who actually invented the time and price theory. So if you're going to believe it from anybody, believe it from the man who created it. Time and price, without time, price is useless. Without price and price patterns, PD arrays, time really has no relevance besides just a pass, right? When you look at a chart, there's price and there's time. These are the only two things that operate within this financial world. So now that we understand time and price theory, what are the actual different trading sessions that we could put time on our side? Well, the first market that opens is actually in Sydney, Australia. It is the Sydney market. It opens from 5 p.m. and it stays open all the way till 2 a.m. So it's overlapping with both Tokyo session and it's almost overlapping with London session, but not quite yet. Next, we have Tokyo session, which is 7 p.m. to 4 a.m. Excuse me. So this is when the Tokyo market is open. These two together, or a blend of these, usually make up what people would call the Asia session or the Tokyo session. But in reality, it also involves some of Sydney, Australia. Next, we have the London session. So the London session runs from 3 a.m. all the way up until 12 p.m. So this ends up overlapping with the New York session. And the New York session runs from 7 a.m. to 5 p.m. Now, obviously, as traders, as day traders, as scalpers, as we covered in that previous lesson, we're not going to be on for this entire session. This is over 2 hours, well over 2 hours. This is also well over 2 hours. All of these are well over 2 hours. So are we just sitting within this whole session? Are we just showing up whenever is convenient for us to show up within the session and then we're good? You could do that. There are traders who do that. But me personally, I've found that the less changing variables you can have within your strategy, the better. So in other words, if I trade on Monday at 2 p.m., Tuesday at 3, Thursday at 2, Friday at 4, you know what I mean? If the markets were open Saturday, let's just say Saturday at 6, and I'm trading the same strategy, I may be trading during the same session, but am I guaranteeing myself that I'm going to be able to repeat this time and time again? Not really, because The interval, the variable of time, is shifting. It's like in science class, guys. You have control variables and you have moving variables. And in trading and your strategy, you want as little moving variables as possible so it could be as repeatable, as systematic, as robotic as possible while you're executing. So how the fuck do we answer that long-ass question that I just asked you? What time do we focus on? Well, that's why we have session kill zones. So within each session, there are smaller windows of time that are even more high probability, that have even more volatility coming in. And if you build a strategy around it, it can be even more predictable. So Asia session, this one is 8 p.m. to 10 p.m. So if you remember, Sydney opened at 5 p.m. Tokyo closes at like 2 or 3. Actually, I'll go back. Tokyo closes at 4. And so in this case, we're narrowing the window down by a lot, by over like 6 hours probably. And it's only a 2-hour window, 8 to 10 p.m. And this one, the most high probability setups form within the Asian session. London, 2 a.m. to 5 a.m. So this is a 3-hour window. And this is also the window of time that you use to mark London high and London low, Asia high and Asia low. So if you're wondering, when I talk in my shorter form videos about what is the exact time for marking the Asia session, the London session, the New York, these are what we use. We use the kill zone times, and that gives you your time-based liquidity. It's a topic we'll cover deeper in this lesson. But moving forward, New York, 8:30 to 11 a.m. That is the kill zone for New York session. So you can see this narrows the window down a lot, and it gives you a lot more specific of a time frame to focus on, and it also gives you a lot smaller of a time frame to practice. So when you're back testing, when you're looking for examples, you only want to be focusing solely on your session and on your kill zone, and we'll take it one step further, and we're going to get into macros. So we're going to get into macros and opens because there's a couple different time fractals that get more specific. So Asia doesn't really have them. I mean, they do have them technically. Guys, I don't ever trade Asia session at all, so I don't really pay attention to that one. So London session macro is 2:33 a.m. to 3 a.m. Don't freaking ask me why there's a 3 there, but it's 2:33 to 3 a.m., not 2:30, not 2:29, 2:33 a.m. to 3 a.m. That is a macro of time. So this is when price is, slightly more likely to deliver, or the algorithm is coded to deliver certain movements in price within these windows of time, within these macros. And it doesn't always happen. It's not mandatory that you need a macro in order to take a trade, but you can. You can have that be a part of your strategy. And next we have the London Silver Bullet, 3 a.m. to 4 a.m. We'll learn more about the Silver Bullet as we get into entry models. If you know, you know. And we have another macro from 4:03 a.m. to 4:30 a.m. So if you're trading within 2 a.m. to 5 a.m., and let's say one of your setups forms at like 2:35, well, now you have double confluence because you're in a kill zone and you're also in a macro, and you also have the price pattern. So you have what? Time and price. So time and price working together. Also, if you're trading and it happens at 4:03 or 4:05, that's also within the macro. And if you catch a silver bullet within that macro, that's another type of trade. So I don't want to confuse you guys. If you're a beginner right now and this is really getting confusing already, guys, just focus on these. Focus on these. Study these windows, these top numbers, these big numbers, 2 a.m. to 5, 8:30 a.m. to 11. If you're trading New York, don't worry too much about the macros yet. But if you're a little bit more advanced and you're looking to add that nuance, we are introducing some of these concepts already. So New York session, 8:30 a.m. to 11. We went over that. First macro is from 8:50 to 9:10. So that 20-minute window of time is a macro. Also, I have one from 9:50 to 10:10. So you'll see a pattern here, especially with the New York ones. It's always the last 10 minutes up until the first 10 minutes. And then we have NYSE Open. And the reason I green this is because this is when I start trading. This is when I actually get active in the markets. I show up at like 9:15 and I wait for the 9:30 open. And that is my protocol. So I like the New York session because this is the most volatile market. Sydney, Tokyo, Europe, all these other places, they do not have as much money as the United States. We have the financial global, headquarters / leader in the world. So the NYSE Open is what I decide to trade for that very reason. All the big players are trading NYSE Open, so it also makes it a lot more predictable. AM Silver Bullet, just like London has a Silver Bullet, we also have a Silver Bullet in New York, 10 a.m. to 11 a.m. Macro as well, 10:50 to 11:10. So these are always happening at every, end of 10 minutes, beginning of 10 minutes of the hour. So every 50 to 10 minutes on the hour, you're getting that macro during New York. So New York has the most macros out of anything. Macro 110 to 140, this is where we start to get into New York PM session. So we have the New York kill zone from 8:30 to 11, but we also have PM session kill zone from 1:30 to 4 p.m. So that is the New York PM kill zone. And then you can see that listed right here. And in between that, we have a macro from 110 to 140. Also, PM Silver Bullet. There's also an hour window within there for PM Silver Bullet. And we also have this macro as well in the PM session. So these are all of the kill zones / sessions, and then the macros that happen within these sessions. My recommendation to all of you, unless, of course, life or work or something doesn't permit you to show up at New York session, guys, just go with the New York session. Everything that I'm teaching in this will apply to every other session, but I'll be teaching examples specifically from the New York session. So make sure that's the one that you're looking at. Now, the other thing to understand is that price is fractal. So what does this mean? Imagine a minute hand and an hour hand on like a clock, right? You have the minute hand going around, you have the seconds, you have the hour hand, but within hours, there are minutes. Within minutes, there are seconds. Within seconds, there are middle seconds, half seconds, etc., etc. Price is the same way. No matter what time frame you're looking at, you could take that time frame and fractalize it down to a smaller time frame, and it's going to show you exactly what's happening from a more closer view. So, case in point, example right here, we have a weekly candle, open down here, closed bullish up here, made this high, made this low. So what do we have here? We have a candle open, made a low, day 1, day 2, 3, 4, 5, made a high, closed right where this candle closes. So that is an example of the weekly transposed to the daily time frame, and these are all the different pairings as well. So 1 weekly candle equals 5 daily candles, 1 daily, 6 4-hour, 1 4-hour, 4 1-hour, and so on and so forth. So price is fractal, guys. And that brings us to time frames. So in terms of time frames, I went over this a little bit on my Instagram, but we're going to go a lot deeper. The time frame pairing, you guys, as you know, it goes from monthly to daily, weekly to 4-hour, daily to 1 hour, 4-hour to 15-minute, and then 15 to 1, 1 hour to 5, 4 hour to 15, daily to 1, etc., etc. The way I personally use it is a little bit different. So what I'll do is I'll first start by finding my bias, my higher time frame bias. And I utilize the weekly first and foremost to see if we have a very long-term draw on liquidity. Sometimes it's obvious, sometimes it's not. If it's not, then I solely use the daily. But if I find a weekly level, I usually use that as my really, really higher time frame bias. Like that's maybe where it could reach by the end of the week, end of these 2 weeks, end of this month. So I'm trying to catch trades in that direction, but it's not necessarily going to go there tomorrow. Daily bias, on the other hand, it can get there tomorrow. It can get there by the end of the day, end of the session potentially, and I use that as my more near-term 2-day bias. So sometimes I'll be aiming for a bullish level on the weekly, but the daily showing me that we're retracing today. So we may retrace today, deliver there tomorrow, but as of now, my bias is going to be bearish because the daily is showing me today we may retrace and go bearish, even though by the end of the week, we may go bullish. So that is how I kind of organize that in my mind. And then same thing with the 4-hour. I'll usually rely on the 4-hour if there's no clear level that we're gunning for on the weekly or daily. And the 4-hour draw works very well during New York session because a new 4-hour candle opens up at 10 o'clock. So it's a very powerful way to catch a move. along with the 4-hour time frame, and I'll be teaching you guys exactly how I do that too deeper in these lessons. But just know higher time frame bias, I'm using the weekly, daily, and 4-hour specifically in the way I just told you. Next, you have your intraday time frames for your point of interest. Now, daily and 4-hour are not intraday time frames. Like, I do not consider them intraday time frames. 1 hour and 15 is what I consider intraday. So this is my higher time frame, weekly, daily, 4-hour. Intraday, I use mainly the 15-minute. I will glance at the 1 hour every now and then. It's not very often. So primarily, I'll be using the 15-minute. So on the 15-minute, I look to find my point of interest. I look for displacements. I look for, obvious one-sided direction. Like, argument can be made for bullish, but not a very strong argument can be made for bearish. Versus conditions where there's 50-50. You can argue a solid reason for it going both ways. That's not what you want. That's what I use on the intraday. That's what I'm looking for. I'm looking for one-sided direction, and even better if it aligns with my daily bias. Once I found that, I use the lower time frames for my entry. So when I used to trade IFEG's 2022 model, when I used to wait for a 1-minute confirmation, I was on the 1 minute, sometimes the 30-second. Now I do the top and bottom ticking, so I'm really just putting my limit order on the 15-minute PD array. And I only drop down to the 1 minute for trade management. So for watching the trade play out, deciding if I'm taking TPs or not, seeing how it's reacting to higher time frame and 15-minute levels, that's what I'm looking at on the minute as soon as my order's filled. But if you're using fair value gaps, IFEGs, you can also use the 1 minute to execute on that as well. So that is how I use my time frames, guys. That's how I utilize time frames. Now, your assignment. Your assignment is to go through. If you haven't decided by now which session you're trading, make a decision, whether it's New York, whether it's London, whether it's Asia session. Go ahead and decide which one you are committing to and comment it down below, guys. Commit to it, because I'm going to hold you guys to this. I don't want all of you guys flip-flopping your sessions, studying New York this week, then London next week. Guys, I went through that process as a trader, and you're never going to find consistency. Same as if you tried to play baseball and basketball at the same time. You're just not going to freaking have consistency. Or let me give you a more one-on-one example. If you played soccer on a grass field versus if you played futsal on the cement, it's the same game, same skills, but if you don't practice in the environment, you're not going to be consistent. You got to pick which environment you're going to master. New York, London, Asia, pick one and comment below which one you are going to trade, as well as day 3 complete. And then once you're done with that, go ahead and do your assignment. Mark out your session on the charts tomorrow morning and study what happens within that window of time. So if you're on TradingView, take the vertical line, put it on the start time of your session, put one on the end, let it play out. You can even watch it while it's happening and study what happens, guys. Study what happens. And we're going to get way deeper into it in the next lesson. I'm going to show you guys exactly how to mark out London high, London low, Asia high, Asia low, New York high and low. And I'm going to show you how to use these time-based liquidity levels to your advantage and also to find trades within your session. So do your homework. Comment below what I just told you to comment. 4 days in, as soon as we get 7 days in, guys, you're pretty much guaranteed to finish because most people don't even make it past the first 7 days. So make sure you stick with it. Do not give up. I know a lot of this is foundational, so if you're a bit more advanced, this is not really teaching you anything super, super brand new, but stick around, be patient. We are laying proper foundation, and there's nothing wrong with refreshing on some fundamentals, guys. Mike Tyson, Tank Davis, they all still do jabs every day. They still all jab. They still all jump work. They still do basic fucking line work, guys. Nobody's too good for the fundamentals. So if you're sitting here like, oh, I know this, or bro's just fucking giving me the basics, like, guys, better is boring. The basics, the foundation is what makes the master. So do not get ahead of yourselves, guys. That shiny object syndrome is the exact reason why you still haven't made it to profitability. So stick with it. God bless you guys. Thank you for being here. and continue to show up, and I'll continue to put you guys on this game.